want to buy something from a vending machine. That's the problem. Hi, Peter. I live in Brazil. I own gold and silver. I'm patiently waiting to invest in a Brazil fund, such as small caps. Yeah, Brazil stocks have been killed. We own one Brazil stock right now in our portfolios. We used to own 3. We got rid of 2 of them a while ago, years ago, but we still have 1. In retrospect, we should have sold that one too, because we could buy it back cheaper now. But no, I think there's some opportunities. I mean, Brazil is not my favorite country. They have, it's certainly not even close in South America, but there is some good value down there. I mean, see, the difference is the U.S. stocks have gone down a lot, but they're still expensive, and they're going to get a lot more expensive after these bailouts and stimulus and all this draconian socialist legislation that's coming. But, I think there's a lot of bargains in the emerging markets. I think there's some really good cheap assets there with good dividends. And yeah, we're taking advantage of that. I mean, those are going to be good investments, I think, and they're going to be great inflation hedges when the emerging market currencies really start to soar, and it's the dollar that ends up submerging. Here's a guy from San Juan, Alan R, 20 bucks. It looks like the panic margin selling in gold is done. Do you think metals have bottomed? Most likely they have bottomed. Yes, I do. As I said, I didn't expect the correction to get much more than 10% when it started. This is a much more shallow correction. We had a 30% decline during the 08 financial crisis, like an official bear market, before we went up to 1900. I think this is much more shallow. I think the next stop after we go through 2000 is probably somewhere between 5 and 10,000, but that's not going to be the end. See, I used to have a $5,000 target for gold back in 2008. People made fun of me because we only got to 2000. But you remember, I had a $1,000 target when it was under 300, and we hit that. But Peter, you said $5,000 goal. It didn't happen. Yeah, it's going to happen now, except now we're going to be looking down at 5,000 instead of up at it. Because since we've printed and created so much money since I made that call, we're actually going to probably go much higher than 5,000. That call wasn't bullish enough. The difference is it's taking longer than I thought, but now we're going to get even higher than I thought. I wasn't wrong. I was early. It's the people who said it wasn't going to happen. They were wrong. They were wrong early, and they're wrong now, and they've probably always been wrong. An apple is $1 and gold is 1,500. 1 ounce of gold buys 1,500 apples. Money supply doubles. Apples are $2 and gold is 3,000. Gold has capital gains. Yes, exactly. That's the problem. If everything doubles, you don't actually have a capital gain in gold. Your purchasing power hasn't changed. And so if you sell and the government says, oh, you've doubled your money, we want half of that in taxes, you're actually poorer than you start. Now, are you as poor as the guy who didn't have gold and only had money in paper? No, because he lost a lot more than you did. But what if the capital gains tax goes to 90%? Then you're barely better off. Now, the key is, I think if apples double, the gold price might triple. And so the price of apples may actually go down in terms of gold, but not as much as the capital gains is going to hit you. That's why you need to be someplace without a capital gains. Or if you're transacting in physical coins, which is what I'm suggesting that you do at Schiff Gold, buy some physical coins. If you go out and use your physical coins to buy an apple, the guy who sold you the apple and got your coin isn't going to tell anybody that you gave him a silver coin for his apples. And so if you don't tell anybody, nobody will know, right? What do I think about anarcho-capitalism? What do you think a government should do about the coronavirus? Look, I'm not an anarchist. That's anarcho-capitalism is anarchy. I don't believe in anarchy. I believe in limited government. I'm very much on the same page as the founders. I mean, I think anarchy would be great if it could exist, but I think it's like a vacuum. I think when there's no government, some government is created, to fill the void. And so rather than waiting for a bad government to come into existence on its own, let's set one up with a lot of strings. Let's set up a limited government with a constitution now so that we know what we have before something worse just comes into existence. The problem is, you could set up a great government like our founders did, but over time, the government finds a way to unbind itself from those chains. And you lose the freedom. That's why everyone said, well, 200 years maybe will last, because they know what happens. But yeah, so anarchy would be good if it could last, but I just don't think it can, which is why I want to set up a limited government, which is hard to keep. That's the problem with government. Once you set it up, it's hard to keep a limit on its power, right? It's like that camel's nose under the tent. Kindly elaborate on the economic implications for the real crash in Europe. Look, there's a lot of problems in Europe, particularly in, some of the countries, Italy, Spain, Greece, Portugal, coronavirus making it even worse. And now the countries that are normally creditors like Germany, now it needs to borrow. Everybody can't borrow. Somebody has to lend, right? It was okay when Germany and Japan and China were lending, other nations could borrow. But when they're borrowing too, we all can't borrow, right? Somebody's got to be on the other side of that transaction, right? Everybody can't be a buyer. Somebody has to be a seller, right? It takes two to tango. And so we all can't have a one-sided tango. It's just not going to work. So look, there's a day of reckoning coming in Europe and Japan, all over the world. People should own gold everywhere. People should own real assets everywhere. But I just think the day of reckoning will be particularly harsh in America. We have benefited the most from the fiat monetary system, and we will lose the most when it comes crashing down. Our economy is the most screwed up as far as the least percent of our economy being manufacturing, the most percent being services, the largest trade deficits, the largest budget deficits as a percentage of the real goods producing portion of our economy. Our government has guaranteed more debts and more liabilities than anybody else. And so, we're just set up for a bigger fall. We've had a bigger ride on the way up. It's going to be a bigger crash on the way down. That's why I think it's particularly important for Americans, but it's also important for everybody. So no matter where you live in the world, I think you will benefit from implementing my investment strategy long term. But it's not about short-term trading. If you believe that I'm right, that the music's going to stop playing, right, and there's going to be a big day of reckoning, and you want a portfolio that will do the best when that day comes, then that's what I'm doing. I'm buying the companies that I think will hold up the best. You got to have something. You got to, if I'm right and cash is trash, it will be, then what are you going to own instead of the trash? That's what I'm doing. I'm your garbage man to get rid of your trash. Well, people don't know it's trash. And let's get some real stuff. So if you're anywhere in the world, go to our website at europacificfunds.com and contact us. Your thoughts on fractional reserve banking. If we go back to the gold standard, what we have, Pat, look, fractional reserve banking, we had that under the gold standard. Banks loan money out. That's how come they can pay interest. That's the whole idea behind a bank. They're not going to keep all the money just in a vault. They're making loans. So there's always going to be some kind of fractional reserve. But in a free market with gold money, banks compete with one another for safety, and no bank wants a run. And so the way to make sure that you don't have a run is you don't make too many loans, but you also don't loan out demand deposits. See, there's a big difference between a demand deposit, at least there used to be. There's not anymore. The whole banking system is screwed up thanks to the Fed. But when we had honest money and honest banking, you had demand deposits and you had time deposits. People didn't loan out demand deposits because they were available on demand, and they didn't pay interest because if they're not loaning out your money, how are they going to pay you interest? In fact, they charged you to hold your demand deposit because the bank wasn't making any money if it wasn't using your money. So it charged you for storing it. It charged you for having a checking account. You paid every month. You paid per check. That was a service that people were paying for. People don't pay for that service anymore because the bank takes your demand deposit and loans it out. Well, how are they going to loan it out if it's supposedly they're on demand? That creates a completely unstable banking system. Now, if you had a time deposit, let's say you went to the bank and you said, yeah, I'm going to lock this money up for 5 years. I'm not going to come get it for 5 years. Now the bank is like, whoa, you're tying the money up for 5 years? I got 5 years to make loans. I can loan it to some entrepreneur who needs some new equipment for his business. I can loan it to this farmer, right, who, to get him through to harvest, right? I got time on the money. So now the bank can make a loan and maybe charge the farmer, 8% for the loan. But because he's charging the farmer 8%, he can pay you 3% for your money. And why does he have to pay you? Because there's another bank that can make loans and he wants your deposits. So everybody is competing by offering higher loans, but they can't offer too high an interest because they need a profit margin. And even on a time deposit, You're not going to loan out all your time deposits because you know what happens? Somebody tells you, here's my money. I don't want it for 5 years. And they buy a CD. And then an emergency comes up and they go to the bank and they say, you know, I need my money back now, right? Now, sometimes there's a small penalty if you break a CD early, but it's not that big a deal. But what no bank wants to do is tell somebody that comes to their bank because they need their CD early and says, you know, I lost my job. I actually need the money now. I can't wait 5 years. Nobody wants to hear their bank say, I'm sorry, but we loaned it out. Come back in 4 years and you can have it. Everybody's going to want their money out of that bank. So people still didn't loan out. They still had their reserves, but it was the free market that dictated how much reserves you would keep in order to maintain your reputation and integrity. Because as a bank, the worst thing that can happen is people don't trust your bank, and now there's a run on your institution. So it's the value of reputation in a free market that keeps banks safe. And without government guarantees, banks, they shop around for safe banks. They don't want to put money in a bank that's reckless, that's making reckless loans, that doesn't have a lot of reserves, because that's their life savings. They don't want to risk losing it. The system we have today is completely nuts. The government corrupted it, right? All the deposits are guaranteed. So the minute the bank gets your money, they do all kinds of stupid things with it. It's all gone. And nobody cares because the government's guaranteed everything, right? And when it all comes crashing down, they blame capitalism. Oh, look at these banks. Look at all these crazy, stupid things they did. Of course, because the government made them do it. The government guaranteed all the loans. The government has deposit insurance. The government is going to bail them out if they fail. It's moral hazard, squared now. So we have the most unsound pain. Now it's going to be excruciating. We can't delay it anymore, right? We've now caught up to the can, and it's now so enormous that we can't kick it anymore. Getting back to what I said, if we had done the right thing and let businesses fail and let interest rates rise and replenished our savings and developed a viable economy that was self-sufficient in savings and production, right? Like it used to be when it really was a great economy. But instead, we inflated the biggest bubble that the world has ever seen, completely dependent on debt and consumption. And now that bubble is blown to smithereens, and we're going to have to deal with the consequences. The piper has been playing for decades, and the irony of it is he may want to be paid, but all we have is worthless currency to pay him in. So I think now this is like an official game of musical chairs, and you got to get out of the dollar. Not only the U.S. dollar, not only U.S. treasuries, but all U.S. dollar denominated debt, because all of it is going to get bought up by the Fed, because any debt the Fed doesn't buy is going to soar in yield and collapse in price. And so that's why I think that long-term interest rates are not already soaring. It's because the Fed is in there buying, because only the Fed would be dumb enough to buy U.S. treasuries. In fact, it's not about dumb enough. It's desperate and insane enough. And the reason they're buying is because they create the money out of thin air. So what do they give a damn what it's worth? But obviously, people who are expecting to retire or live off of the income that those bonds produce, you'd have to be a fool to buy them. In fact, right now, as I said, it's musical chairs. When the music stops, if you still have any dollars, if you still have any treasuries, muni bonds, corporate bonds, cash value left in your annuity, in your life insurance, a fixed annuity, if you have any of that stuff when the music stops, you lose. And you don't just lose a game, you lose everything. And so you gotta make sure that you're sitting down before that music stops. And the obvious chair is gold, right? You gotta have gold. It's up over $50 an ounce today. It's a good thing that there's so much ignorance out there in the financial media, because if people on CNBC or Fox or CNN or any of these networks, if they had one person on there leveling with the American public like I am and actually telling people what's going to happen and explaining the mistakes that the Fed and Congress not only made in the past, but is making now. And if you don't know by now, if you can't see how many of my predictions have come true, things that nobody else predicted but me, at least publicly. All this stuff is happening. Things that nobody could have even imagined. People thought I was crazy when I talked about this stuff a decade ago, and it's all happening now. And some people are just focused on, well, the stock market is still up. Well, the dollar hasn't crashed. Gold's only 1,600. If you wait until all of my financial predictions come true, just like all of my economic predictions and Fed predictions have been coming true one after another, well, then it doesn't matter. I mean, you can't help yourself. You're broke. But you still have the opportunity to recognize the truth of what I've been saying and the folly of what everybody has been saying in the conventional media, and recognize that these fools on Capitol Hill who are so convinced that what the markets need is another bailout. They don't need another bailout. We need a bailout from the bailouts, but the only bailout will work is the free market. We need capitalism to bail out the economy from failed socialism. Unfortunately, we're about to elect Joe Biden. And even though he's not Bernie Sanders, he's going to govern like Bernie Sanders. He's going to be pushed to the left by the biggest economic crisis in U.S. history. Said, if you think the Great Depression was bad, you don't know anything about how bad this is going to be. Maybe so much worse. I said earlier on that during the Depression, the cost of living went down. This time, the cost of living is going to go sky high. You want to know what it's like when your money collapses in value? Take a look at some of the YouTube videos of Venezuela. It's not pretty. Yeah, they're going to try to blame it on the coronavirus. Don't believe anybody. In fact, this is probably the best news the government has had. This is the best scapegoat they could have hoped for. Oh, the coronavirus, right? This couldn't possibly be our fault. Oh, this is another 100-year flood, which we seem to have every 10 years or so. But, oh, this is totally out of left field. Nobody could have predicted this. Look, bad things happen. That's easy to predict. Exactly what? Nobody really knows. But it's going to rain. It's not always going to be sunny, and sometimes when it rains, it pours. That's why you save for a rainy day. You don't pretend that it's never going to rain and leverage yourself up to the hilt, but that's what we did as a nation because nobody wanted to pay the cost of saving for a rainy day because you can't spend and save the same money. If you want to build a real economy, you got to stop spending. But if you have a phony economy based on spending, if you stop spending and start saving, then the phony economy implodes, which is exactly what you want a phony economy to do. Because the sooner it implodes, the better. Because the longer you prop it up, the worse it's going to be. And we've succeeded in propping it up for so many years longer than anybody could have thought, who understood the actual nature of the problem. So now it's going to collapse in a more spectacular way than even I imagined. So the economic outcome is going to be far worse than I thought. When I was writing Crash Proof in 2007. I'm not happy about that. I really wish that cooler heads would have prevailed and that, the Austrian school and people like me and others, and again, I'm not the only one. Right? I don't want to act like I'm the only one that saw this coming. I just saw it coming and explained it in a more public way than a lot of other people. And it's not that I'm so smart. I mean, it's just that everybody else is so dumb. I mean, that's the reality. I mean, you don't have to be a genius to figure this out. You just have to be a complete fool, right, to miss it. Or you're just caught up in the moment. That is the problem with bubbles, right? When you are trapped in a bubble, and there are a lot of smart people who have been in this bubble for a long time. And the problem is they don't know it, right? It's like that movie, The Truman Show, right? They think it's reality. They don't know it's fantasy. But I'm not inside the bubble. I've always been kind of on the fringes. And I've been able to look at everything objectively from the outside. And from the outside, you see the bubble, right? But nobody that's in it, they're all in it together, they have no idea. And so that's why, it still hasn't dawned on them that they made mistakes in 2008. They still think it worked. That's the crazy part about it. It didn't work. If it worked, they wouldn't have to do it again. Think about how much quantitative easing, the trillions and trillions and trillions that have already been committed. I said this. I said that QE4, if we're going to count this as QE4 instead of 5, 6, 7, and 8, I mean, they've announced it. They announced a brand new QE program every day now. So I don't know if we just lump it all into one big QE or just keep on with the numbers because we're already way through the Rocky movies. But why did I say from the beginning that QE4 would be bigger than QE1, 2, and 3 combined? because I knew that in order to try to inflate a bubble bigger than the bubble in everything that popped, they would need the most monetary stimulus ever. But I said, it's not going to work. There is impossible. You cannot blow up a bubble that was bigger than the one we just had. And the reason these clowns think it worked is because the stock market made new highs. Real estate prices went up. So what? The stock market was overvalued. Even in 2008, it was overvalued. Making it more overvalued was a mistake. The real estate market was even more overvalued than the stock market. And instead of letting real estate prices keep falling, which was part of the cure, we made the economy sicker by pushing them back up again. And the reason we had the weakest recovery, but the longest lasting recovery ever, is because we didn't recover from anything. We actually got sicker the entire time they told us the economy was recovering. That's why Donald Trump got elected, because he leveled with the public about how bad the economy was and how the numbers were phony. The problem was, after he became elected, he conned the public with the same phony numbers and tried to get everybody to believe that the economy was great. And he was able to increase the illusion with deficits, with tax cut finance deficits. So he was able to blow extra air into the bubble to increase the delusion and get corporate America on board, get the Republicans on board to actually think that he had made America great again, instead of taking the bubble that he inherited from Obama, which Obama inherited from Bush, which Bush inherited from Clinton, right? We just made all those bubbles bigger. That's all we did. We continued the bubble blowing. Well, the bubble blowing stops now. This is it. And the Fed is going to destroy the dollar this time. The inflation is not going into the financial markets, right? That's why the stock market is not even really responding to the Fed stimulus. Yes, I think the market would likely be lower without all this money printing, and we may even get some kind of BS rally at some point. But gold is what's going up. The only thing is the dollar isn't tanking yet, and that's a short-term phenomenon because of this global rush for liquidity in dollars. Because all this new money that the Fed is creating, a lot of it has just been committed. It hasn't actually gone into circulation yet. But once this short-term liquidity squeeze around the world ends, the dollar is going to sink like a stone. It is going to collapse. The only thing that hides how fast it's falling is that other fiat currencies are falling too, because central bankers all around the world are making the same idiotic mistakes we are. Governments all around the world are making the same idiotic mistakes our government is making. We are leading the idiot parade, and they are following us. But the difference is other economies are much sounder. Right? They're the producers. They're the creditors. They don't have a complete house of cards, phony economy like we do, and they do not issue the world reserve currency. No country is going to suffer more than the United States when the current fiat monetary system comes crashing down, because we enjoy a privileged place in that system as the issuer of the reserve currency, which is a ticket to live beyond our means, to consume without producing, to borrow without saving. That's all going to come to an end. And then we're going to find out what the real problem is. The real problem isn't that consumers aren't spending. The problem is they have nothing to buy. The stimulus that has already been offered by Trump, this new stimulus package, equals like 10% of GDP. 10%, we're just getting started. During the Great Depression, for the entirety, between 1929 and 1941, just before World War II started, the entire Keynesian fiscal stimulus was only about 3% of GDP. That's it. Government spending increased by about 9% of GDP, and taxes increased by about 6%. And so the difference was 3%. That was the stimulus. That was it in the Depression. And ironically, it was the stimulus that helped create the Depression. We didn't need stimulus. We didn't need more government. We needed to be relieved with less government. Had they cut government spending instead of increased it, there would not have been a depression. That's the irony. That's what happened in 1920. 1920 got started worse than the Great Depression. The problem was it was over so quickly, they never had a chance to pass the stimulus. That's what happened. It was really, really bad, but Congress didn't get around to doing anything. And as a result, the economy healed itself. The reason we had a Great Depression in 1929 is because we weren't that lucky. Hoover came in with his idiot bailouts and stimulus, whatever they did, and turned that downturn into a Great Depression. Well, the idiots we have today, and again, the guys back then were geniuses compared to these morons. What they are going to do is they're going to turn what could have been a very severe recession into something much worse than a depression, into a inflationary depression. So as I said, you got to buy your gold, Schiff Gold. I know the guys are there somewhere answering the calls. Gold and silver, that's real money. Buy it now. I know you're going to wait 2 or 3 months to get your silver. Well, if you wait much longer to buy it, you might be waiting 6 months, a year. We may run out. Who knows what's going to happen with gold and silver? Just buy yours while you can. For investments, if you got bigger portfolios, you got to get out of all U.S. treasuries, muni bonds, corporate bonds, anything that's a promise to pay you dollars. Because the only thing that's going to buy less than the dollar today than the dollar in the future. And the further in the future it is, the less it's going to buy. So get rid of them. The Fed is giving you a get out of jail free card. The Fed is buying all the bonds. Sell them yours. Don't be the last one to unload their bonds on the Fed, because the longer you wait, the less purchasing power you're going to get. And you want to get into foreign assets. That's why I've been saying it's not about the market going down. It's about the dollar collapsing. Because in order to save the market and the phony economy, they sacrifice the dollar. Well, they're going to get a lot more than they bargained for. It's not like the dollar is just going to get a little beat up. It's going to get completely slaughtered. And so you got to do something. You got to move your portfolios out of dollar-denominated stuff, out of U.S. stocks too. Even though U.S. stocks, the ones that don't go bankrupt, won't lose as much as bonds. But I think U.S. stocks are going to be so taken over by socialists in Washington. There's going to be so much worker-friendly regulation that basically effectively nationalizes the major American corporations. They're going to be run as worker cooperatives. Like no one's going to give a damn about the shareholder. So before the shareholders figure out that they're the patsies, sell your U.S. stocks. You need to be aware of this political risk, because the worse the economy gets, the greater the political risk, right? The more of our individual liberties are going to be lost as people are scrambling for somebody to help them, not knowing that the reason they need help is because of all the government help in the past. That wasn't help at all. The government causes all the crisis and then comes riding to the rescue, right? They're the firemen that light the fires. And then they say, oh, look, we're here to put it out. Yes, we'll stop lighting them. So you got to get out of your U.S. assets. Talk to my brokers at Euro Pacific Capital. Transfer an account over, IRAs, retirement, regular accounts, so that we can manage the money outside the U.S. Yes, I know other countries are screwing up their currencies. There's going to be inflation all over the world. The difference is there won't be hyperinflation all over the world. There will probably in the United States. The other countries aren't going to lose their reserve currency status because they don't have it to lose. Other countries are already producing more than they consume. They're already saving more than they borrow. They are viable. It's America that's in for a rude awakening. We have a date with destiny and an awakening coming, but you don't want to be there for that awakening. You don't want to keep that date personally. I mean, as Americans, we're going to have to deal with it, but I'd rather deal with it as a solvent American than as a broke American, because the vast majority of Americans are going to be wiped out by this. They're not going to be wiped out by the coronavirus, but by the government's cure for the coronavirus that started long before anybody ever thought up the word coronavirus, right? We started this decades ago, and Alan Greenspan may have started it, but Jerome Powell is going to finish it, most likely, unless somebody else gets appointed by Biden who's different. And then that person maybe will be the fall guy or gal. We'll see. But this is not, there's not another 10, 12 years. That's not going to happen. Don't think there's any way that that's going to happen. We have now accelerated the time scale. Think about where you were a month ago, right? Did you think any of this nonsense was possible? Had you ever seen anything like this outside of a science fiction movie? No. Well, as I said, you ain't seen nothing yet. It's going to get a whole lot worse. And before it does, at least get prepared financially, and then maybe try to get prepared emotionally. Anyway, let me try to take some questions. I know there's a bunch of questions. I got to turn. Is there a password to this other computer? Yeah. Because it's better not to have them, because it just makes it harder to get in. All right. So I'm going to start taking the questions. I guess I take them in order of the dollar value. This is a $150 question. And pretty soon, $150 will be what you pay for a carton of eggs, if you're lucky. And then the question is, well, how long will it be before that same carton of eggs costs $300? And then how long before there is no carton of eggs? And if you want a carton of eggs, you got to find the farmer, and you got to give him some silver. Otherwise, he's not giving you his eggs. Anyway, let me see this question. It says, is Euro Pacific Capital compliant with AAOIFI standards? Accounting, auditing, financial institution is worth doing. The floodgates of mud. I don't know. I mean, I'm not familiar with every single rule, but we're compliant with everything that we're required. I'm not the compliance officer. And Euro Pacific Capital right now is a division. I sold the BD. The new owners renamed it Alliance Global Partners. And yeah, I mean, they got a chief compliance officer. We got all kinds of guys that make sure we comply with all of the FINRA rules, all the SEC rules. Most of these rules, I think, are counterproductive and simply run up the costs unnecessarily by design, as a mechanism to keep out competition for the major broker dealers. That's how all regulation works. Government regulates small business to make it harder for small businesses to get started and make it harder for those who are in business to stay in business. All of it is about protecting the larger corporations that basically buy the politicians with their campaign donations. Anyway, next up is Adam, who is a huge fan. Please discuss economic rise of Germany despite World War I reparations and the Great Depression of using debt. Well, Germany, I mean, the big problem with Germany is Weimar Republic and hyperinflation. And that's where you can go and see the examples of money being carried around in wheelbarrows. And there's a famous story about somebody who left a wheelbarrow full of Reichsmarks on the sidewalk and went into a store. And when they came back out, their money was on the ground and the wheelbarrow had been stolen. Right? That just shows you how quickly money can lose value. And what happened to Germany is after the war, the Treaty of Versailles was extremely, harsh on Germany. And that was probably a byproduct of the United States having entered the war. And we fought with, the UK and our allies and really crushed the Germans. I think without the U.S. entry into the war, they probably would have negotiated a peace, and it would have been more balanced. And therefore, Germany would not have gone through the hyperinflation, which gave rise to Adolf Hitler and World War II and concentration camps. And so you never know what's going to happen, when you knock over the first domino, which is why it's always good not to get involved in foreign wars, because you never know how much greater a problem you might be creating than the one that you think you're solving. But in any event, what happened to Germany is they had agreed to a lot of war reparations. The Germans agreed to pay.
About their Republican bill to raise the debt ceiling. Again, any raise is a mistake. It is a loss. It is bad news because it means that the government will continue not paying its bills, running up debt instead of paying its bills. So the national debt keeps getting bigger and bigger and bigger, and we get closer and closer to a debt crisis, which is the only way that this thing is going to come to an end. We've been raising the debt ceiling now for 100 years, more than 100 years, and look what it's got us. It's got us $32 trillion of debt. None of this brinksmanship, none of these showdowns over the debt have done anything to stop the compounding of the debt, because they always raise the ceiling. The only thing that would make a difference is to leave that ceiling in place. But then, of course, we accelerate all of the pain, like all the bad things, all the horrible pain that the Democrats say, is going to happen if we don't raise the debt ceiling. All of that is going to happen because we are raising the debt ceiling. It's just going to happen worse. It's going to happen later, but it's going to happen much worse. So we should deal with it now, but we won't, because even these little itsy bitsy cuts, using that word lightly, that the Republicans have opposed, well, that's too much. So if the Democrats aren't even willing to do this little teeny bit, then where are we going to go? Now, it's not that there's nothing good in the Republican bill. I mean, there's some stuff in there that's good. I mean, for example, they kill the student loan debt forgiveness. So that's a good thing. And, that helps the debt. And by the way, one of the reasons that deficits have exploded is because so many people who have student loans aren't paying. And I think that maybe is it the first of the month or it's coming up real soon. But supposedly, everybody who hasn't been making their student loan payments, they got to start paying. I think it's like maybe May 1st. I got to look that up, but it's happening very soon. All these people who for the last 2 or 3 years haven't made any student loan payments. They haven't made any interest payments. They haven't made any principal payments. So they've been living off this extra money. Now, all of a sudden, they have to start making these payments. And that may help reduce the deficit a little bit. But what is that going to do to all these individuals and these families? They're going to lose that extra money. They're basically getting the equivalent of a tax hike. And that is going to hurt, especially considering that prices have been going up. Inflation is driving up prices. One way people were able to cover those costs was that they didn't have to make their student loan payments. Well, now they have to start making those payments, so they won't have that money to pay for this more expensive stock. So that's another accident waiting to happen. Also, the Republican bill kills the extra money for the IRS. Now, supposedly, that was actually going to bring in revenue because we were going to unleash, all these IRS agents like a swarm of locusts, and they were going to cover the country, and they were going to extract new revenue that they sucked out of taxpayers. Now, of course, the government said that these locusts were just going to go for the millionaires and billionaires. There's no money there. They're already paying a lot, and then these taxes that they avoid, they do it legally. They use legal loopholes to minimize their taxes. The people who are cheating are the middle class, right? Because they can't afford these expensive lawyers. They don't qualify for these loopholes. So the only way they can survive is to cheat. And I'm not, going to blame somebody if the only way they can feed their family and pay their rent is if they cheat on their taxes. Well, that's what they're doing. I'm not going out there and advising people to do that. I'm just recognizing that it happens. And small businesses, they're far more likely to, cheat on their taxes. Self-employed, small businesses where they, put a lot of their personal expenses on their business. Maybe they earn some cash. And of course, the people that earn a lot of cash, the guys in the gig economy, right? Those guys, they're not paying a lot of taxes. They've got a lot of unreported income. People that get tips don't report. They get a really big tip. They don't report that. If it's cash, they put it in their pockets, right? So this is what's going on. That's who the Democrats were going to target with these IRS agents. So, but if the Republicans, cut that expense, in theory, they're also going to miss out on the extra tax revenue. But, to the extent that a lot of these IRS agents start targeting business owners, entrepreneurs, that's going to hurt the economy. They might end up firing a bunch of people because they're dealing with all these government tax collectors. And so they may not actually get the tax revenue, because if you harass small business owners and make them spend a lot of money defending themselves against government audits, well, that, they don't have as much time to grow their business. You deplete them of the resources that they needed to invest in their business and to hire people. I mean, we don't want businessmen having to spend all their time fighting off the IRS. And so to the extent that these agents just added additional, red tape to a small business owners, business, it would have been a net negative. So it might have even backfired, and maybe even all these extra IRS agents would have resulted in lower tax collection, not the higher collection that they were banking on based on recovering all this money. The other thing that they repealed is some of these green energy tax credits or whatever, some stuff, Green New Deal kind of things that made it into the Inflation Reduction Act. I can't help but laugh, when I say the Inflation Reduction Act, it's just such a joke, because the Inflation Reduction Act was paid for by inflation. Where did the money come from to finance all the spending from the Inflation Reduction Act? It came from inflation. So the Inflation Reduction Act was itself inflationary. So a bill with the name of reducing inflation, by passing that bill, they guaranteed higher inflation. Again, government always achieves the opposite of whatever they title their legislation, which is why there should be a law, truth in legislating, because if that law were in effect, they would have to have named this bill the Inflation Acceleration Act or the Act to Increase Inflation. But if they labeled it what it actually did, how many congressmen are going to vote to increase inflation? Try to explain that vote to your constituents. Yeah, I voted for the Inflation Acceleration Act because we didn't think we had enough inflation, and so I voted for more. Nobody can explain that vote, but it's much easier to explain the vote to reduce inflation. Yes, of course I voted for the Inflation Reduction Act, even though the act increased inflation. That's not the name. So you can vote to increase inflation, but then take credit for voting to decrease inflation because of the fraud involved in naming the legislation. You know, it's ironic because the government wants to go after fraud in the private sector if somebody defrauds their customers, but they're totally allowed to defraud their voters because basically that's the customer, right? If you're a politician, your customers are the ones that vote for you, but you don't have to be honest with them at all. You can just tell them a pack of lies and it's totally fine. Just like when Biden says that, oh, we don't want to hurt American families, so we just want a clean bill to raise the debt ceiling. Those American families are on the hook to repay that debt. You know, all of your debt, when you want to look at how much debt you have, you just can't look at your own debt. You just can't look at your mortgage or your car loan or your student loan or credit card debt. You have to look at your share of the national debt. Every American is on the hook to pay their share. And of course, you're actually on the hook to pay a lot more than your share because a big chunk of Americans don't pay any taxes at all. So if you're not paying any taxes at all, then your share is going to have to be paid for by somebody who is paying taxes. And of course, it's not just per capita because the babies aren't paying, right? If you have a 2-year-old or a 4-year-old or they're not kicking in, right? So you got to get rid of all the little kids. It's the people that are working and paying taxes. They have a share of the national debt, and it's several $100,000 a person. It's huge. And they keep increasing this collective liability that everybody has.